We've partially undone the drop from Friday. Just a typical taco move. Some just random tweet from out of nowhere in the middle of the day. Everything collapses, and then backpedaling all weekend, and then an explosive move on Monday. It's interesting because all that was said on Friday has been completely, I guess gainsaid would be the right way to say it, contradicted, undone, but the drop hasn't. The drop's been half undone because, understandably, I think people are starting to kind of distrust the market if it can fall $2 trillion on a tweet. And the bounce makes sense. Maybe it'll keep going up a little more tomorrow. I don't know. But this is a pretty serious break because, as I pointed out Friday, that trend line, which had been holding since April 7, and which to various degrees had been breaking over the past 2 weeks, pretty much broke across the board as of Friday. For my own trading, I've been very happy with one exception, which is the following. I've said over and over and over again, my thesis is bullish, precious, bearish equities. And I have no problem hanging on to shorts on a day like this. Sure, the profits have diminished to some degree. The stupid thing I keep doing, and I'm offering this just as an anecdote, is I keep trying to dip my toe into the bearish waters when it comes to precious metals too. It doesn't work. This precious metals bull is powerful, and I think will go on for years. Why I keep trying to short anything to do with it is beyond me, but eventually I'll learn. So my two absolute stinkers today that I came into the day with, which got stopped at once, was silver, SLV, which is at lifetime highs today, and XME, which just cannot seem to stop. It is just Hercules. So those are my only, I had 28 other shorts, didn't cover a single one of them, perfectly happy with them. But yeah, this precious metal stuff, Tim, knock it off. Sure, it's going to backfill at some point. It may fall for weeks. Precious metals are really, really, really high. But trying to time that amongst this powerhouse of a rally has become kind of a losing proposition. So for myself, I'm really going to try to stop. Having said all that, let's look at the charts I've pulled together here. We're going to start with the spider here. That wedge is a thing of beauty. This is just a classic trading pattern. It's doing exactly what you would want it to do. It varies from market to market. Some broke only Friday, some broke 2 weeks ago or even more. In the case of the spider, it broke on this day. It persistently stayed under the broken wedge, just curving away, kind of flattening out. And then, of course, Friday, total mayhem. And then today, we're getting this bounce. So we're just pretty much smack dab in the middle of the 50% mark. If you look at this on an intraday basis, we're basically where we were after the 100% tariff tweet came out. The 100% tariff tweet took things down to about right here. And then he piled on top of that. I don't even want to see the guy, and they're being nasty and all this. And that even after the market was closed, it kept hammering lower. So we sort of undid that exacerbation later on. But the 100% tariff tweet, even though that's been control Z'd, is still intact because people can't trust this market. If it's this frail, guys having a bad day, sends out a mean tweet, and $2 trillion, poof, The small caps, IWM, as I said, they were kind of the ultimo hombre. They were the last man standing. And so they only broke as of Friday. They're rallying now, and they are a little above this broken trend line, but the damage is done. I think the fact that the trend line is broken is meaningful. The FX side, China, naturally is also up. But here again, we look at this. Here's the line. It broke it a little bit on Thursday and then just collapsed on Friday, bouncing mightily here. It's up 3.12%. But the damage is done. At some point, it could be right this second, it could be later this week. At some point, the relief rally, the he didn't mean it rally, will exhaust itself. And I would also point out that earnings are going to start coming in, and the market's kind of priced for perfection right now. So that could be another factor, because we're devoid of government data. But luckily, corporate data is not at the mercy of whether the government is open or not. So that will start coming in with banks this week, and then really gets cool next week, and then goes hyper cool the week after that. As far as the cubes go, a big bounce on these naturally. Tech was particularly badly affected on Friday. You can see it unwound all those gains from the past couple of weeks. And once again, we're just about in the middle of that bounce. A very small range today compared to this sweeping range. It's interesting too, because there were a lot of markets on Friday were at lifetime highs before they plunged. So they were simultaneously at lifetime highs and also had one of the biggest drops in recent memory. But yeah, here's the trend line on that one. And a little bit of damage done day after day after day after day, and finally gave up the ghost on Friday. More specifically, the semiconductors are especially strong, and this is one of the very few sectors that did not break yet. The April 7 trend line is still intact. In fact, it did a pretty miraculous job, just about to the penny on that. Because the anchor points on this are here on April 7 and over here. And so given those anchor points, we got this plunge and almost a perfect tag of the trend line, and then boing, up we go. So it's got a real fondness for kind of hanging out in this zone right here. This is a very tight range. This dip on Friday was an anomaly. So we're back in this range, which has been intact for well more than a week at this point. So turning our attention to Godzilla over here, Goldzilla, lifetime high. I've talked about the pairs charts a lot, the long-term predilection of the market to be for gold to just knock the stuffing out of equities for years to come, I think. This is really just not the beginning, but not too deep into the move. If you told me in a year gold will be $10,000 an ounce, absolutely could believe that. It's all about the relationship between gold and equities. So the front month is up a eye-popping $120, almost $125. Today's bar is one of the biggest we've seen in a long time. Okay, all right. My cursor is stopping to work. I hope you still see me, but let me just do something here. Okay. Yes, I've seduced it back into working. Yay. 1979 is when I started with computers. I've learned a thing or two since then, but I hope you can hear me at least. Yeah, it looks that way. All right, here's GC. Gold has been up for a very long time. It has had an incredible 2025. It had a good 2024 as well. This base down here really set the things in motion. And like I say, at some point I will get it through my very thick skull not to stop monkeying around with this on anything but long positions. This is just a Herculean beast. Silver, interestingly enough, has for the first time tagged its prior high. Now, of course, this is a nominal level. That is to say, inflation is not taken into account. But in just raw dollar terms, we have at long last reached again the levels we saw back during the when Jimmy Carter was in office, the Hunt brothers cornering of the market, or attempt to, and back in 2011, and then here. And like I said a couple of days ago, I think it was Thursday or Wednesday, it should put a chill through your bones, this giant cup with handle pattern, because silver, is it going to $100 an ounce, $200 an ounce? I hate to sound like a Bitcoin person here. It's going to $1 million. This is a very good pattern. Now, it could be a triple top or something like that, but I put a little less credence in that, because this is not in terms of real money. This is shown in terms of dollars. The present price is much less valuable, wildly less valuable than 1979 in a true money term. But I will just say, in these nominal terms, this is a really good bullish pattern. So I wouldn't be surprised to see gold thrive for a long time. I've gotten so distracted by this precious metals chatter. I'm down to my last 3 minutes. So I better pick up the pace a little bit. GLD, obviously, another big pop, 2.36%. Silver SLV likewise, and also approaching its own ETF peak. Not quite there, but getting very, very close. And our old friend Palladium, God bless it, having another great day. It's been a real laggard. You know, it's nowhere, it's not even in the same zip code as its own lifetime highs, but it is the youngest looking bullish pattern there is. That is to say, I think it's got, there's a much easier argument to be made for this to go a lot higher as opposed to the absolute bottle rockets we've seen with gold and silver. So Palladium still look terrific. All right, we have to be judicious with our final 2 minutes here. I'll just hit on miners here for a sec. Miners are up 4.44%. It's a little bit odd, I would say, that we're basically at the same levels we were, say, on Wednesday, when the precious metals were a lot lower than they are right now. So it seems miners aren't quite participating as fully. On a relative basis, they're lagging the stuff they dig out of the ground. So that's worth noting. I had a bunch of individual miners that I was going to show. I'm going to just skip those because we have very, very little time left. I was also going to just touch upon, I'll just show you real quick, the whole quantum zone still doing very well. Rigetti, RGTI up 20% plus. And my personal favorite, D-Wave Quantum, QBTS up even more, about a 22% gain there. So the quantum space just thriving. But just to kind of wrap things up, we only got to about half of our symbols here, but just to jump to the very bottom of my list here, the RTY, the small caps. This is the small cap futures going back for its entire history. And on the one hand, you have, similar to silver, you've got a nice cup with handle pattern here, which one could plausibly argue is a very bullish looking pattern. And if we can break above that, it could just add a whole new leg to this bull market. I would caution, however, that this is the third instance in recent memory that we've been in this vicinity. The prior two times, obviously, it's slumped lower. And importantly, this trend line has failed. And it's going to take it will have to muster its strength to get back above this trend line and above these recent highs here to lend some credibility to this thing actually running with that cup and handle. If it, on the other hand, stays below this trend line and starts to peel lower like so, this could be a very different market in the days ahead.